And finally, this evening, the JSE showed strength on Wednesday morning as global markets reacted to comments from U.S. Federal Reserve officials. San Francisco Fed President Mary Delay indicated that an interest rate cut this month is uncertain but possible, with the final Federal Open Market Committee meeting of the year set for December 17th to 18th. Meanwhile, the South African rand weakened, trading early at 18 rand and 13 cents against the dollar, about 0.3% lower than the previous close. Additionally, the top 40 index rose approximately 0.5%. Stock market analyst Mushima Gama shares insights on today's market performance.
As the year comes to an end, the market somewhat slows down. So there's really nothing topical out there except for the movement of the rand. And as I'd mentioned before, the status of the rand is not only important for economic reasons, but it also affects the man on the street, because we ultimately feel the pinch in the goods and services that are being offered, particularly when the rand is weaker. So, for example, a weaker rand will affect petrol prices. In fact, it will cause petrol prices to rise. And the ripple effect there is that goods and services will start costing more. So ideally, we would like a stronger rand. It's currently trading at 18.13, which is not too far from the level last week. And what we're waiting for is the US job report, which will then give us a clue on what the Fed's future interest rate trajectory will be. Why is this important to us? It's because, like any other emerging market currency, the rand takes its direction from rather global drivers such as the US economic data that gets released, besides our own economic events. The one that the report we're waiting for today particularly is the US ADP employment report, which is just merely a high frequency real-time measure of US employment. Now, if that report comes out weaker, it will then support the stance of the Fed leaving interest rates unchanged, which then bodes well for the dollar. In fact, the dollar will start strengthening. But if that report comes out weaker, it will then revive speculation that the Fed may then cut interest rates further, and the dollar does not like that. The dollar is likely to weaken based on that. But it will then cause the rand to strengthen because of that negative correlation between the two currencies. In other words, when one currency strengthens, the other weakens and vice versa. And remember, ideally, we would like a stronger rand for our own consumption purposes. So we're going to wait for that data and see what the results are. But you'll probably know instantly from the movement of the rand whether that report came out stronger or weaker.